Hello, everyone. Welcome back to another enlightening session of our weekly price action based technical analysis series. Today, our spotlight is on the XAUUSD market structure with a special journey into the weekly time frame. Why? Well, because price has found itself perched at a pivotal juncture in the historical trajectory of this commodity. Before we embark, it's important to stress that this video is purely for educational purposes. Our goal is to offer you valuable insight into the XAUUSD chart, enhancing your proficiency in price action analysis. Remember that trading requires caution. Always consult an independent financial advisor to assess your unique situation before making any investment decisions. So, in preparation for the upcoming week, I have conducted a comprehensive price action based technical analysis on the gold spot market structure using simple parameters such as trend lines, key levels, and of course, chart patterns to gain valuable insight into the market's dynamics. The trading setup for last week presented intriguing opportunities, but the intricacies of the prevailing structure affected our gains immensely. As the week concluded with roughly 100 to 150 pips after taking a loss at some point, as you will see here. So I have the links to this commentary situated in the description box below for those who would love to review this for educational purposes. And if you are watching from my YouTube channel, you will be seeing the link at the top right hand side of your screen right now. So with our foundation set, let's plunge straight into the heart of the matter. So, in preparation for next week, one of the things I looked at here was the daily time frame, where, of course, if you look at the structure from an holistic standpoint, it is quite clear that price action has been very bullish since the last quarter of last year. And to further emphasize this bullish momentum, I was able to identify a couple of ascending trend lines, which of course has been supporting that bullish momentum since October last year. So if we connected the series of higher lows here, this is what we can find. Then, in addition to this ascending trend line, is this key level situated at the 1910 level. And in fact, if you go to as far back as the beginning of this year, you will see how the 1910 level has been a major determinant of price action. Look at what happened here in the month of January, though we saw some breakout of that area, but it was more prominent with selling pressure as we saw price drop to the downside from that area. And if we fast forward into the month of March, we saw how price broke out of that structure for the second time this year. And since that moment, price action had remained above the 1910 level, and not until the later part of June struck the early days of the month of July we saw price come back to retest that structure. But since retesting and finding buy pressure around that area at the beginning of the month of July, you will see that the bullish momentum wasn't really that strong as we saw selling pressure resume again along the $1,987 area to push price back into that key level one more time. So you would agree with me that we are at a crucial moment in the market as price action is right back into that key level at the 1910 level. Now that made me take a little step further to look at the weekly time frame to see how the market has been playing out from an holistic perspective. Now, scaling up a little bit into the weekly time frame, you will see how that 1900 level had been a major determinant of selling opportunities since the year 2020. And as a result of this, I'm of the opinion that we are at a critical level, hence we need to be very careful, looking out for precise structures and patterns that will guide our trading decisions for the new week. So going back into the daily time frame, what I was able to notice here is the lower highs that prevailed this market ever since price tested that new high had a $2,078 level. And if we connect the series of lower highs here, you will see that we have a descending trend line which has been supporting this bearish momentum in the last 3 months, I think. So price has been supporting that bearish momentum to the downside. Now, going into the new week, the question at this juncture is, will price action continue with the bearish momentum that has started in the last couple of months to break down the 1,910 level for the first time in the last 6 months, I think, through inside a downtrend scenario. Of course, after considering our price action has broken down both of the ascending trend line we identified earlier. That is one scenario I'm looking at. Then the other possibility here is, will price respect the 1,910 level one more time, just as it has been doing since the beginning of this year to incite an uptrend continuation? Well, in order to guide our trading activity for this week, I was able to identify a simple setup that we can use on the 4 hours time frame. But before I delve into the 4 hours time frame, I would like us to run through the economic calendar for this week, as we all know that these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable information which will be enough for us to position ourselves in such a way that we can catch any potential trading opportunity prior, during, and even after this event. Now, going into the economic calendar, let me zoom this in a little bit so that we can see things clearly. I was able to spool out a couple of high impact events from the US economic docket. So the first high impact event is coming in on Tuesday, August 15th, and that is the retail sales, which is the measure of consumer spending on goods, indicating the health of consumer demand and economic activity. And of course, a high retail sales data suggests strong consumer confidence and economic growth, potentially boosting the currency and stock market. Then on Wednesday, we have the FOMC minute, which is the Federal Open Market Committee minute, summarizes the discussion and decision of the central bank's monetary policy meeting, which happened some weeks ago. And the importance here is that it helps us to have an insight into the future interest rate changes, which can impact the currency and, of course, commodity market significantly. And I think that's the last one we had. So we have two high impact events coming in from the US economic docket. And of course, we want to be looking at how the market will be anticipating this event, which of course would reflect on the chart as price action. So scaling down into the 4 hours time frame, this is what I was able to come up with. So I what I did here was to take into consideration the nature of price action since the month of June, and I was able to come up with a simple setup. Well, the first thing clear is that beautiful demand zone around the 1900 area, as you will see, that sellers have struggled anytime price action comes into this area. This happened here in the month of June, as you will see here. We also saw the same thing happen during the last week of the month of June. And during the first week of July, we saw buy pressure around that area. And in the last couple of weeks now, prices back into that zone. And of course, we have been noticing some buy pressure around that area. So, will price action respect the zone one more time to incite another wave of bullish momentum? Well, I already have a level situated at the $1,922.50 level, as you will see here. If price breaks out of this level, it would have also broken out of that descending trend line I was able to spot here, and this will simply mean that the descending trend line may no longer have the capacity to continue to negate the bullish attempt, hereby giving us an opportunity to join an uptrend movement. However, if we witness a scenario this week where price breaks down the 1910 level, respecting that descending trend line along the line, then continued selling pressure below the structure will be welcoming selling opportunities for us this week. But trust me, I will be with you in the comment section on Monday morning after monitoring how participants in the market will be reacting to the zone right here to give you an insight of what I think is likely going to be happening. I hope you found this content helpful and useful in making your independent trading decision for the week. I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. And in fact, by subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.